Thanks for having me.
I've had some incoming lately from the bulls who say that this market is still poised to go up. What do you think, bullish or bearish right now?
I mean, the market's up and the fundamentals look worse than they did, so I have to like it less than I did previously. I mean, if I'm just using data, I think there's some signs that things are going to slow. A lot of my incoming is about, woes in the commercial real estate market, lower growth from the regional banks. So I don't think the news is directionally positive. I guess if you take a step back, we were just talking off air that maybe a little surprising we didn't get a big negative pre-release from a corporate this week. So maybe that's a positive that, we're kind of most of the way through pre-release week without a big negative. But
maybe things aren't as bad as the bears want to make it seem as though they are. That's what the bulls say.
Could be.
It's like you guys are just too negative. Like earnings aren't going to be as bad as the naysayers suggest. Fed's almost done. Hey, maybe the Fed's going to cut. And if that happens, you don't want to be on the wrong side of that, do you?
I don't think you want to be on the wrong side of that, but I don't think that's going to happen. I think what the market has already told you is the Fed pivoted. I mean, NASDAQ was up 17% in Q1. Isn't that because people think the Fed pivoted already? I mean, if they didn't and they end up being slightly more hawkish, I think it's about what's in the price. I worry a little bit that expectations for earnings look a little too optimistic. Okay,
Still?
Particularly the 24 numbers, which have a V shape. We're not there yet, but they're going to come down a little bit. Maybe it's fine. Maybe the market can rally through that. Bond yields are a little bit lower, so maybe the comparison looks okay. But I just kind of take a step back and say, within the equity market, parts of it are discounting a recession, like energy and metals, and parts of it aren't, like semiconductors, right? So something's wrong here. I think today is a trading day. When I look at what's going on, I actually think it makes more sense than most of the other days. I think industrials.
Why is that?
Because I think industrials should have pulled back a little bit.
Well, because the data that came out between ADP and ISM and PMI services.
Yeah, and just generally, if you can't get a construction loan from a regional bank, then why is then URI is probably worth a little bit less.
Well, let me ask you this. If the data is negative, it's been bad, right, this week. We've sort of been reminded that the economy continues to slow. Why are people like Mester coming out and being as hawkish as they sound in the face of weakening data? And do you take it for anything more than, well, what do you expect she's going to say?
Look, I don't know. You have a lot better Fed watchers on your program than me, so I'm flattered you're asking me that question. But what I would say is,
doesn't it relate to how the market's going to perform?
Totally. It relates to the multiple. And my personal judgment is they care about full employment and stable pricing. Which one of those makes you dovish? I mean, to me, the tweet of the week in the last week was WM, Waste Management, WM CEO saying, I cannot find somebody to drive a garbage truck in Houston for $90,000 a year. But if I want an MBA from a small school for $60,000 a year, I can swim in those. That's telling you something about the state of the economy. We just don't have enough workers for a lot of jobs. So I'm not sure unemployment's going to come up that much for this phase of this cycle. Inflation's still above the target. Those are the two things they care about. Why the heck are they going to be dovish? Well, so what's in the price is dovish, but what's the reality is probably a little bit less dovish. That's a reason to be negative.
We're asking in our Twitter question today, how many more times is the Fed going to hike? 1, 2, or 3? If you had to answer that question in the here and now, what would you say?
More than the consensus view, for sure. They're not going to be as dovish as what's in the price.
Even if the economy's weakening?
Yeah, it's not just the economy. They care about full employment and stable pricing, and the unemployment rate and the CPI are not where they want. So if they get dovish now, I would be really surprised.
But Jolts, right, showed at least in the direction that the Fed has been looking for.
Yeah, we were talking about the Jolts off the air. I mean, look, at the end of the day, I think they look at some of the lagging indicators and they look at the unemployment rate. We'll get a data point soon.
Friday?
Yep, Friday. But I just think that at the end of the day, the price to earnings ratio for U.S. equities is very correlated statistically significantly to Fed fund futures. And the perception is that they're going to get dovish. That's in the price with huge moves in tech stocks off lows. And so the risk reward on those names is skewed to the negative, which is why today makes a little sense to me. Take a little bit of air out of that kind of what's in the price. And as you know, my price guess is the price to earnings times the earnings. And the only conversation about the Fed is about the price to earnings. But the earnings matters too. And if that's slowing, if that's what Silicon Valley Bank told you, if that's what some of the growth things are telling you, then I think you probably want to downwardly revise your earnings outlook today versus maybe a month or two
Unless
ago.
Silicon Valley Bank was so idiosyncratic that we look to make too much of it and suggest, well, that happened, so this is bound to happen.
Here's the Silicon Valley hold the market maturity bet was idiosyncratic, at least the size of it. But the part that wasn't was the comment that their CEO made that 14% annualized decline in our deposit base in February. Right, that's tech, venture, and other businesses showing some slowdowns in the fundamentals that were surprising. That's what catalyzed the run of the bank. So I don't know if that's isolated to just them. That's the reason other banks have run into problems with the perception they may have some exposure to that too. I don't think that affects Microsoft's earnings. Don't get me wrong, necessarily. But I think it's the economy slowing. We know loan growth is going to slow, which you need for economic growth. And so I think if you're marking to market today versus a month ago, your fundamental outlook is a little bit worse, and the stock market's up. So if you're being intellectually honest, you have to like the market less now than you did a month ago.